How to find 10% plus rates of return using ETFs. What up, you got Mr. Smith, 0.5 of Mr. and Mrs. Smith. And if you're part of the royalty movement already, then this is a training. But if you just so happen to stumble upon this video, then, you just found it due to the title. And this is just something to kind of enlighten more people of what exists. Now, this video was inspired for a couple of different reasons. For one, I kind of like the idea of ETFs for a person who's beginning investing and somebody who's not always looking at the stock market, things of that nature, to be able to invest in something that gives you exposure to a lot of different areas, but minimize your risk and still can create some level of great returns. Now, before I get too deep into anything, I will say this. I'm not a financial advisor. I don't have a Series 6, 7, whatever it is that they have to have in order to be able to tell you what to invest in, nor am I fiduciary, which, if you do seek out guidance on investing, a fiduciary might be a better fit because they're legally committed to having to find something, the best thing that will benefit you, because they take less of the profits. However, it's important for you to get an understanding of investing for yourself. So shout out to the royalty movement. Shout out to anybody who's new, who's come on, whether you came on through the 5-Day Credit Challenge, whether you come on through TikTok, because we've been applying pressure over there on TikTok, or whether you just came in through YouTube, wherever you are, Facebook, whoever. We welcome you to the royalty movement. But for everyone else, welcome and consider joining the royalty movement. The royalty movement is an economic empowerment movement centered around teaching people how to increase their cash flow, increase their credit score, and keep more of their money and make money if they decide to do that. The ways that we help people increase their cash flow are by legally minimizing their taxes. One tax strategy we use, if a person has a job, is properly correcting their W-4. Most people have it filled out incorrectly. Most people don't realize that they're leaving about $1,000 a month on the table, or $200 to $800 a month on the table, and that extra money could go towards debt elimination, which is another wealth strategy that we teach, which could then be rolled over into bettering their credit, because if we show you how to better your credit and we give them a whole blueprint, letters included, the whole 9 yards, once you know how to better your credit, you save money on interest rates, and that's a powerful piece to the puzzle, because that's taking money back from somebody else who was taking it from you. In that case, it'll be the banks. And if you're minimizing your taxes, then you know where you're getting some of your money back from. But it's not about just minimizing your taxes. It's not about just adjusting your W-4. It's about taking that extra money and doing the right things with it so that that money has potential to grow and benefit you the most way possible. Then, in addition to that, we want you to understand investing to a degree that you at least feel comfortable with it. See, a lot of people are terrified of investing, or they just don't do it because they, have their fears associated with it. Well, this vehicle that I'm going to show today is a vehicle that should help you have a little more comfort in the realm of investing, but also put you in a position to where your money can be growing, due to the fact that, there are some things that I'm going to speak on that I think if you just think from this angle, without getting off into any lingo and dialogue and things that will confuse you, I want to keep it really, really simple so you can take a step back and say, oh, okay, yeah, if I think like that, maybe I do need to have my money in these areas. And once you think like that, I think it'll be a game changer and put you in a position to where you kind of get addicted to investing and having fun with it, and then just seeing your money grow as well. But a lot of people don't even realize what I'm about to share. So part of it was me having a love for ETFs, or just me really having an interest in ETFs. But another part is something that I experienced when trying to share some valuable information. I'm going to make this story real brief. Well, long story short, we teach a strategy centered around income shifting. And one of the things that recently took place is people qualified or got $500 or $250, whatever that amount is, in the form of a tax credit. Now, I know it's not a long-term thing. I know that people won't have that tax credit forever. I know it may only last 6 months, 5 months, whatever that duration is. However, if a person never gets exposed to the idea of possibly multiplying their money, then they'll automatically just spend it on regular stuff, not knowing that if you treat that money like you wasn't getting it in the first place, that money could grow. And that's what tends to happen. Sometimes people get a newfound stream of income and they just fit it into whatever else they was doing and maybe maximizing some other areas, but that money could have been growing. So I did a video and basically say, hey, you know, this money, if you take this extra money, and the example I used was $500. Say if you take this extra money and you invest it here, for this amount of years, you'll have this. Now, the mindset is what I wanted people to adopt. Yes, I already stated that the amount may not come for a certain duration, but if a person invests $500 for a month, 2 months, 3 months, 6 months, and they see it grow, then if that money cuts off, they may be thinking, hey, what's some other ways I can keep that $500 a month going? And they may try to figure out ways to keep investing because they may see some growth happening. So I wanted to get people to adopt the mindset. That said, in my examples, I showed 10% rate of return, and then I did it out for like 10 years, and then I think I did 20 years. Then I did crypto just to kind of give a little scenario, and then I stretched that out for 5 years because crypto being more volatile, meaning more risky, it also means that it also has a greater chance of getting some reward. So yes, it's volatile, but volatility is where money is made in many cases as well. Without volatility, you don't have the opportunity to grow by leaps and bounds. So, you know, it's just the risk that you take. So by understanding that, now you're in a position to say, you know what, I can put my money in a place and it can possibly grow. But the thing that I ran into, and this is the kickback that I ran into, the kickback that I ran into was people saying, he don't know what he's talking about. 10%, 10%, that's unheard of. Show me where you're getting 10% at. And there was a lot of people who were really sold on the idea that 10% is unheard of. So right there and there, I was like, hold on. Somebody been lied to. Somebody has not been shown certain things. And it was people who claim to have a certain level of clout as it relates to what they do in their industry. And they were like, yeah, 10%, you know, that's a stretch. I'm like, you might not want to say that out loud, because if I was somebody who saw you publicly say that, but then somebody else showing me how you can, then I might not want to put my money in your hands because you think 10% is hard to come by. Now, 10% is a good return, but a lot of times people make it seem like it's bigger than what it is or so hard to come by. It's good if your money is growing at any percentage consecutively over the years, and I'm not guaranteeing any levels of or any rate of return. But don't act like 10% is just unheard of. So I said, let me talk to the royalty movement and show them some things that they can start doing to get familiar with investing and how to look for certain things and what to think about in order to determine if they want to put their money in an area that has the potential to grow by well over 10% rate of return. And I'm going to give you some examples that show what their year-to-date is, what their 1 year is, 3 year is, or 5 year rate of return is if they have that much data. Some people don't have that much data because it's a new industry, and that may be a good sign that you can get into it, because as the data grows, your money grows with it. So that's just something to think about. So let's dive in. Let's go ahead and dive into it, because I really want people to understand that, you know, anytime you hear somebody making it seem like 10% is hard to come by and this and that, anytime somebody's doubtful or downplaying something, you might want to start doing your own homework. Learn to question everything, think for yourself, and then do your homework. Because what I ended up doing when people were questioning it and doubting it, I created a whole video similar to this, but I'm going to focus strictly on ETFs. And I showed them an example of the ETF, and I showed them an example of the crypto, and just gave them some plays of what had produced a certain rate of return. And then the example that I gave, it made 10% look like whoever is questioning that don't know what they're talking about. So whoever was questioning it didn't know what they was talking about. So I made sure I shared that with everybody who had something to say. And some of them didn't want to admit it. But I know if they watch the video, then I guarantee you their thought has shifted. And hopefully some of the people that they were trying to deter, their thoughts shifted. And if you're one of the people who think that 10% is hard to come by just because the banks didn't offer it, then hopefully this shifts your mentality as well, because the banks aren't in business to make you wealthy. They're in business to stay wealthy. So if they give you 1% and make it sound good, then that doesn't mean it's good. That just means that they got themselves a sucker who they know that they can play for another 10 years. That's why they hand out suckers at the bank, according to one of the business partners we ran into. Anyway, that being said, let's dive in. So the site that I'm on is a site that's publicly available to anybody. They do have tiers to where you can pay like a certain fee to have a pro version that includes much more. I don't have that. I just use it as a research tool. However, the stuff that's on here now is a great place to start to get, you know, more than enough of what you need. In fact, some of this stuff is, you know, going to be over your head anyway, because a lot of this stuff is over mine, but it doesn't have to, you don't have to understand everything in order to benefit from it. I want you to remember that. You don't have to understand everything in order to benefit from it. You might want to type that down below. I don't have to understand it in order to benefit from it. You don't understand electricity fully, but I guarantee you when you flip that switch, you banking on that light coming on because you feel that the wires are doing everything they need to do behind the walls. You don't understand it, but you make it do what it do. Same for a car. You might not understand all the features and everything, what makes it click, but you benefit from it. So think about all the things that you benefit from that you do not fully understand and take that same energy and apply it to investing. You might not understand it, but guess what? That don't mean that you can't get wealthy using it. All right, let's go. ETFDB.com. That's a site that you can go to, and basically it's an ETF directory, and it just has a list of the ETFs and different information about it, the industry, you know, rates of return that it's getting, just a ton of different things about it. So as you do your research, this is something that you can use. As the ETF universe continues to grow, use our tables below to narrow down different ETF themes. They are spread across a vast range of asset classes, industries, issuers, and investment styles. All funds are in multiples. ETF themes, for instance, a leveraged U.S. government bond ETF is a leveraged bond. A government bond, a bond in the U.S. and in North America region. So they're just talking about how it's going to show up. And I'm going to simplify it and just kind of show you how I go about using the site in a way that I feel can maybe benefit you. Now, as it relates to ETFs, just to kind of give you a brief insight of what an ETF is. An ETF is a bulk of stocks formed into one company that you can invest in so you benefit from all of the stocks that are inside it. So say, for example, you want to invest in, you know, a particular industry. And by industry, I mean you might want to invest in technology. You might want to invest in energy. You might want to invest in medical. You might want to invest in, you know, natural resources. So it's a ton of different industries, and I'll show you. But you might want to invest in something, and now instead of investing in one company and hoping that you pick the right best stocks, praying that you pick the right stock, instead you invest in the whole industry and you benefit from the top 15 stocks that they've chosen, whoever put together the ETF. And that's a powerful place to be in, especially if you're not always watching, you don't know all of the things that you need to do if you're losing money in one stock. It just kind of protects you in that area. And it gives you exposure to multiple different industries. And one of the beauties of it is if a stock isn't performing like they want it to perform, they can kick it out of the ETF. You still invested in the full ETF, but when they kick it out, they replace it with something that is performing. In addition to that, if certain stocks aren't performing or they're underperforming or they're performing at a lower level, some of the ones that's performing at the higher level will help pull up the rate of return. So that's a powerful thing. Now, I will say this. If you did happen to hit a home run with a stock and you invested directly in that stock, yeah, you would have made more money. But once you see some of these ETFs, you will feel more comfortable in saying, okay, that put me in a better position to win because I had a lower risk. So anytime it's a lower risk, it sometimes lowers the return, but that doesn't mean that their return can't be astronomical. And I'll talk to you more about that as we proceed. So, ETF directory, this is basically the database for ETFs. So, as you can see, if you scroll down here to the directory that have sectors, I want you to focus on the industry. The industry, and I've already pulled up, 10 plus industries specifically that I want you to look into. But basically, as you can see, underneath the industry, these are the different industries that the ETF are formed around. So you're going to see certain industries that you might be interested in. Now, before you get to thinking about the industry, I want you to think about investing from a long-term angle. Long-term being a year, 5 years, 10 years. I want you to think long-term. So if you're thinking long-term, you might not invest in something that's on its way out of the door. You know what I mean? So, for example, I'm just use this as an example. Say they had an ETF that was centered around shopping malls, physical shopping malls. It might not be smart to invest in a shopping mall ETF. It just might not be. Simon has a lot of different malls around the nation, and investing in Simon might not be the most long-term best decision for you to make, because they took a big hit. They're still taking a big hit, and over the next 5 years, you may lose money. But if you think about, okay, what are some industries that are emerging right now? And we're going to go over about 5 different industries, and some of them is going to be more than one ETF that you can consider. But what are some areas that are emerging based on what's going on? So you just got to think, what are some areas that are emerging and have a future? And a lot of times, if you're a parent, you can look at some of your kids' activities and determine, oh, they spend a lot of time doing this. You know what? This might be a good investment. So a lot of times, kids and what they're interested in lets you know that it has a future. Why is that important? Because they're young. They have a future. They're going to be around for a while. So some of the things that they're interested in is things that will probably be here 5 years from now, because they will keep that ball rolling. Now, you keep your money rolling if you invest in certain things that have a future. So just one thing, and we got a couple of that we'll go over. One of the things that kids are interested in is gaming. Okay, instead of looking down on it, how can you invest in it and make money with the gaming industry blowing up the way that it has? The same is true when you think about other things, such as the direction technology is going, the internet is going, artificial intelligence and robotics is going, solar is going, cannabis is going. You know, you got to think about what has a future. Not all 50 states are allowed to legally have cannabis, which means that as one adopts it, a new one adopts it, another one adopts it, and boom, now you've been investing the whole time while all of these states were adopting cannabis, and now your money has grown along the journey. You didn't wait until everybody was accepting and say, you know what, I'm finna invest now. Nah, you're getting it on the front end because, you know, it still has a future. So think long term. Don't get caught just trying to invest in what used to be when you can figure out if that thing itself is innovating enough to have a future. That's my rant for now. All right, let's go. So these are some of the industries that you can see. You got aerospace and defense, agribusiness, airlines, automotive, banks, biotech, you know, broad fields. So these are just broad industries, things that might, you know, just pile up quite a few. And what you were looking at is, you'll see that each section has multiple ETFs in it. So this one has 5, this one has 20, this one has 17, this one has 24. You'll see that some of these have, one of them has 57, 14. So some of these industries have multiple ETFs inside them. But you choose an industry that you feel you're interested in that has a future, and you just do your looking and your due diligence and research on that particular company or that particular ETF. So I'm going to go through some of the things that I look at, and I won't be too specific because some people go as far as to look at the CEO because the leadership does matter. But the beauty of this is that the person who invested and put together the ETF, they've done a lot of their work that many people who analyze stocks are, you know, they've done the work that you would have had to have done and some. So they kind of did the work for you to the point where I'm not saying just throw your money in there, but look at their track record at least and just rest assured that a lot of the work that they've done has the potential to benefit you. But do your due diligence. I never tell you not to, but if there's something that, like, some people don't want to go that deep, look into some of the industries and then consider the fact that they already put some stocks in here that has a bright future based on the way that they analyze, and the ones that are underperforming, they get kicked out and replaced. So let's go. I already picked out some industries, and I'm going to go through these one by one and kind of let you know why I clicked it, why I considered it, and why you could possibly consider it as well, and show you some rates of return and just kind of let you know my mindset on it. I'm not saying I'm an expert by any stretch of the imagination, but you know, there's been some good ones that I've picked that I hadn't heard people talk about, and I've seen them get some great returns over time. That being said, ARK. This is ARK. The stock symbol is right here, ARKW. If I was to go through the industry that this was in, I believe this was in the internet industry, because the internet is the biggest, is big right now. So they've been saying, and it's been big for a while, but it still has a bright future ahead of it. So ARK Next Generation Internet ETF is an internet ETF. And some of the things that I look at, one of the first things that I look at are, I'm going to look through the holdings and the performance, and some technicals and all of that if you're interested in looking at it. And then it has an analysis report. You can read this. You can get the PDF, print it out if you want to do all of that. It's just kind of letting you know some of the ins and outs, the details of it. It lets you know what type of investment theme it follows. If it's a growth, anytime you see growth, that means it's has the potential to grow at a higher rate of return versus it being like an equity stock, something you just sit your money in and it's kind of stable. But this, kind of gives you a breakdown of what describes this ETF, but I don't want to overcomplicate this. So two of the things that I look at are the holdings and the performance, and that's what I'll do just for the sake of this training / video. So you can see what's all in it. And some of these companies may be some that you are familiar with. And instead of you having to invest in each individual one, you get exposure to it just by tapping into this. You can also see that the price of it is currently $146 per share. And then depending on what investment vehicle you use or platform you use, you can probably buy partial shares. I personally prefer one that I'll leave below. And if you invest in this for the first time and you invest at least $100, you'll get 2 to 4 stocks for free, which can be upwards of up to $1,200 just by you investing $100 using the link that's available to you below. And it'll take you to one of the systems that I like, or one of the platforms I like, which is known as Webull, WEBULL. But if you use the link below, you can get 1 to 4 or 2 to 4 stocks up to $1,200 in value just by investing at least $100 when you start out. So that being said, you see the price, see the change in price, last updated yesterday. So, we'll leave it at that. But let's check out these holdings. What companies are these? Is this ETF investing in? And this is the top 15. Top 15 means there are more. And if you have the pro version, I believe you'll be able to, dissect this a little bit more. But here are the top 15 holdings in this ARKW ETF. We got Tesla. Many people want to invest in Tesla, but they may not have the thousands that it costs to invest in Tesla. It's Twitter in here, Shopify, Square. I got the Teladoc Health, and we know that's growing. Twilio, that's a texting app. Coinbase, that just got introduced to the stock market. That's centered around cryptocurrency, if you're not familiar with that. Spotify technology again, so it's 2 different ones or extensions of Spotify. Grayscale Bitcoin Trust. Got Peloton Interactive. I think that's workout related, if I'm not mistaken. Unity Software, Zoom, we all know what that is. Roku with the TVs, Trade Desk, DraftKings, that's a gaming type app. So it has exposure to quite a bit of things that you may be very familiar with. And if you look at this, you can look at the percentage of the assets that had the most growth. Tesla is carrying quite a bit of the weight here, but all of these are still getting great or getting some level of returns. But I want you to look at this. After you've seen the holdings, you can just kind of see what the performance was like. And it'll look a little different than if you were to view this on the main page, but don't miss the point. So you want to look at the 1 year, the 3 year, and the 5 year. Some people, on some platforms, this will show up as a 52-week. And don't look at the most, you can look at it, the 1 week return, 4 week return, because you're not thinking short term. 26 weeks, that's half a year. Things go up and down. In fact, if you see that it has gone down, this means that it is in a buying zone, a buying opportunity. Many times, if it has taken a great dip, but you believe in the industry, that means it's an opportunity to buy. Anytime you see minuses, that means it's on sale. In the stock world, some people run away from it like, it dropped, the stock dropped. Now that means it's on sale. You don't run away from it if you see it in the store. When you see the tag and it say 50% off, you're like, it's going, the value on there. Nah, you looking at it like, ooh, I can get 2 of these for the price of 1. So think about it like that when you're investing. Now, the 1 year rate of return, 47%. That's the 1 year rate of return. Year to date, they're down, which means that this is a buying opportunity, but the 1 year return is 47+%. The 3 year return is 176%. The 5-year return is almost 600%. Almost 600%. But people are saying that 10% is hard to come by. They did that in the past year times 4. They did that several times in the last 3 years, several more times in the last 5 years. So be careful what you let somebody feed you if they tell you that something is impossible. Either you learn and prove them wrong, or you just disregard them and make sure you know better, because that's all that matters at the end of the day. So understand that these things are available. You just got to think futuristic. So if a person would invest in this 5 years ago because they knew the internet had a bright future, 500% rate of return would have taken place over the last 5 years. If they would have did it 3 years ago, almost 200% rate of return. A year ago, 47% rate of return. So that's you taking a certain amount of money and multiplying it just by putting it in this vehicle, and you're not risking much because it's not investing in just one thing that if it drops, you lose it all. No, it's invested across the board. So now you're supported by the ups and downs of all of the other companies, but the track record on the rate of return has high potential. So screenshot this, write this down, do your own research on it if that's something you want to consider. And, you know, it's already had a great run. That doesn't mean it will continue to have the same run, and that doesn't mean that it won't continue to have this great run. But just do your homework. There are other internet ETFs that you can consider that may have a even longer potential run, but I just wanted to pull this one up as an example. All right, let's flow through the other ones pretty quick. I just really want you to see that this exists so you can see what I'm looking at initially, and just that the rates of returns are there. Exposure is a big deal. So this is OGIG. That's the stock symbol, OGIG. It stands for O Shares Global Internet Giant. So here, this is another internet stock, and this one only costs $55 per share. I actually had some of this, grew some, and then took some profits and put it somewhere else, and waiting on some profits there. But $55 per share. Now let's look at the holdings on this. All right, now on this one, we got Amazon, we got Alphabet, which is Google, we got 10-cent holdings. I forget what that is. We got Microsoft, we got Alibaba, we got Facebook. We got, let's see. I'm not sure what this one is. It may be a foreign stock, but either way, we got it. Shopify, Zoom is in here, Roku is in here. So you'll see that some of these have some of the same ones. Snap Bookings, I believe that's a booking holdings. That may be travel. But you'll see some of them have some of the same stocks in it, but you just take your pick. And this one is only $55 per share. Now, that's the holding, so let's see what type of performance this one has done. Okay, so we got, I told you to look at the 1 year. So year to date, they've done about 1%. But over the past year, 34, or the 1 year return is 34%. But people still saying 10% is hard to come by. 3 years, over the past 3 years, 120%. So that means you would have doubled your money in 3 years, which is a great return. The 5 year, they don't even have the data for it, which means that, say for instance, this particular ETFs perform, their 5 year performance goes up to be about 300%, 400%, 500%. You have time to enter into this and benefit from that because it's newer than the other stocks. They don't have the 5 year data available. So that's something to make note of. Sometimes, even though one has performed greatly, some people jump into that, and that's cool. But this $55 one may turn into, this 55 price may turn into $110 price, which means that your money doubled if you had it in this vehicle, and over the 5 year run, you benefited from the growth of that. So this is another internet ETF for you to consider, OGIG. Do your due diligence. Look into it. Let me know if you have any questions. But I'm keeping it plain because I don't like to overcomplicate it. I don't know all of the ins and outs that everybody else knows. I know more than some, so I'm teaching what I know because I know that if you know that these things exist, then you can quiet the noise when people are saying that it doesn't exist. All right, this ETF is IRB. This is a robotics and artificial intelligence ETF. You tell me if robots have a future, if artificial intelligence has a future. This is very young in terms of the world of robotics that's on the way and artificial intelligence that's here, but also on the way as well. And I'm going to wrap up because the time is ticking faster than I wanted to. So this one is $43 per share. Let's look at the holdings. And some of these might be some companies you don't recognize unless you're already, buying robots and using artificial intelligence. And some of them may be foreign. But we got Parade, we got Soho, ZTE, Domo, Global Unichip, Adobe in the building, Splunk, Apple in the building. Apple doing some great things. Pinterest, HubSpot, Dropbox. And some of these you may also Teradata. Some of these you may be familiar with, but these are some of the top 15 holdings, and let's see how it's been performing. All right, again, 5 years, no data. That means potential to benefit from the growth of this artificial intelligence and robotic stock. And it doesn't stop at 5 years. It'll continue to grow, and if artificial intelligence is here for another 10 years, then guess what? Your money will still be growing as long as this ETF is still performing, and it's a good chance that it will be. So the 1 year rate of return, well over 10% again, 37%. The 3 year return, well over 10% again, 78%, all by investing in this ETF. Let's move to the next one. 3D printing, another industry that is on the rise. Now, I'm going to say this real quick. 3D printing definitely has a future, and I need to stick a pin on this one because I don't have this one, PRNT, but I knew about it at one point. PRNT, print. 3D printing is a big deal. At first, I thought it was just about printing out little gaming type stuff or just little pieces that might, or little tools. They got different things that might print out some tools. But then I learned that they're printing out things like organs. They actually work in the body that can serve as a transplant that fits into the body. That's a whole nother conversation. They're 3D printing things like a house. I think it's something that took place in China. They did a 3D print of a house in less than, I want to say less than 2 days, but it may have been less than a week. A little house, 3D print, and it only took about 1 or 2 employees working the machine. You know how many people it typically take to build a house? So it's a future in that, and if you don't know about it, that just means that it's not popular yet, which means that it has even more upside potential. So definitely consider this. So let's see what the holdings are on this one, just in case it's something that you recognize. 3D Systems, we got HP in the building, X1, PTC, Desktop, Meta, Autodesk, Nano, Microsoft in the building, Timber, Dassault. So it's a lot of these I don't recognize, but just because I don't understand it, like I said earlier, just because you don't understand something doesn't mean that you can't benefit from it. All right, so let's see what the returns have been, or the performance has been. Okay, perfect. 1 year, 60%, way over 10%. 3 year, 44%. 5 year, 85%. So overall, it's doing great. Good place that would have multiplied the money, and I could see this doing 100% over the years that it actually starts to be even highly adopted. All right, let's transition. What's next? Technology. This is the technology ETF. This is the ROM. Okay, I don't even know if I looked at this one. I just clicked it just to use it as an example. All right, so this is technology. We got holdings. All right, we got Apple, Microsoft, Facebook, Alphabet. When you see that, know that that's Google, and you'll see it right here. Google. NVIDIA, Adobe, Cisco, Salesforce, Intel, Broadcom, Texas Instruments. So a lot of these you probably already understand or know about. Qualcomm, this is all in the technology realm. So let's see how it's performed. Past year, 88%, way over 10%. Past 3 years, almost 250%. Past 5 years, 871%. I wish I would have been in on that one. I wish I would have knew what I know now on that one. So it's important for us to think futuristically early, because this could very well easily be some of the ETFs that I showed you that hasn't widely been adopted just yet. So just keep that in mind, because you see 10%, when somebody's saying 10% is hard to come by, unheard of, good and well, either A, they're trying to sell you something, they don't have your best interest at heart, or they just don't know what they're talking about. One of the two. All right, let's proceed. I need some water. Let me take a big sip. All of this talking. All right, ARK Innovation. So this is an innovation. I guess more technology, but let's see. ARKK, All right, currently $122, trading at $122 per share. See what the holdings are. You may recognize some of these. Boom, there's Tesla again, Roku, Teladoc, Square, Shopify, Zoom, Coinbase, Twilio, Unity, Spotify, Zillow, DocuSign. Yeah, so you recognize some of these, some therapeutics in there. So, another one for you to consider. Let's see what their performance has been like. See if we can beat 10% again. 1 year, 46%. Last 3 years, 160%. Last 5 years, 516%. Let's keep going. We just want to debunk the idea of 10%. And ETFs giving you exposure to multiple stocks so you're not trying to gamble on one. Amplify online retail. So this is retail. Now, when I talk about shopping malls going out of business, that doesn't mean that retail is going out of business, because retail just shifted to online. And there's a lot of online people who have businesses that are selling online. So retail is not a bad place. It definitely has potential and a future, because a lot of people are moving to online. A lot more entrepreneurs are selling online, and retail is in that space. That's just something to consider. $124 is the stock price. Let's look at the holdings. All right, we got stamps.com. A lot of people doing some shipping. All right, we got Lands End, we got Revolve. I'm trying to think of the ones I recognize. Just Eat Takeaway, Big Commerce, Carvana, that's a growing. Stitch, Upwork, DoorDash, Peloton again, Chewy, PayPal, you know what that is, Etsy, Overstock. So all of these are the exposure that you would get from this ETF currently. Let's look and see if we can do 10% again. 1 year rate of return, 56%. 3 year rate of return, look at it, you see it, over 100% easily. 5 year rate of return, 385%. All right, got a couple more to go through. This one is a betting and gaming app. Like I said, kids are into gaming. You might as well get an understanding of it. This one is just $27 per share. Let's look at the holdings. All right, some of these you may not be familiar with, but you don't have to understand it in order to benefit. Cambria, Kendrick, Intime, Flutter, DraftKings, Rush Street, Evolution, 888 Holdings. I'm just jumping around some, but you get the point. Golden Nugget, it's something that people talk about as well. So you get the point, man. Let's look at the performance. See if we can be 10%. And gaming has a future. I want you to understand that it's people that play games and make more money than professional athletes, because esports is a big deal. They make more money than professional athletes. So don't shy away from the fact that your kid might play games. Games is a real industry, and it has the potential to move out some of the things that people spend their whole lives trying to do for a profit, because gaming can still be a good profession. And I say profession, but it could be a passion, but turns into a profession because you get paid professionally. That being said, let's look at it. 1 year return, 63%. So again, would be 10%. This might be one to strongly consider. They don't have enough data because it's still a new industry to have a 3 year return or a 5 year return. So I need to put a pin in that one as well, because that could easily be one that doubles, triples, and gives you that 200, 300 rate of return. Now, let's keep it moving. This is another gaming one. This one is $31, and this one considers esports as well. Hero, Hero, that's the stock symbol. The holdings in that might be some of the same ones. We got NVIDIA, we got C, we got Activision, Electronic, we got Nintendo in the building. Embracer Group, Zynga. Y'all know about Zynga. They have a lot of different games on social media and Facebook, things of that nature. Ubisoft, okay, Bill. So, yeah, just something to look at. Now, let's look at the performance. See if we can be 10%. Boom, 1 year, 30%. Still a fresh industry, so it doesn't have data for 3 and 5 years. So that's an opportunity. That's an opportunity. Don't look at this like, I don't know much about it. The times that you get, when you get in sooner, when less people are talking about it, that's usually the best time. Yes, it's more risky because it has less data, but if you believe in the future of the industry and the homework that has been done to put together the ETF, I say go for it. All right, let's go. Global X social media ETF. So this is a social media ETF. So they got an ETF for social media that I pulled up. Let's look at the whole. You knew Facebook was going to be at the top of the list. Facebook, Tencent. I think Tencent got something to do with TikTok. If so, you already know. Let's see, what's the stock price on this? So 68 bucks. All right, I'm deviating for a second. I'm gonna do some other research on it. If Tencent got something to do with TikTok, then that's pretty big. But I'm gonna get off of that because I don't want to get away from what I was doing. So Facebook, Tencent, Snap, got Twitter, Google. You see it, Pinterest, some big ones. Zynga again, Spotify, some big ones. All right, let's see what their performance has been. This is social media, so we know it's been performing over the past year, 46%. Past 3 years, 88%. Past 5 years, 220%. All right, got a couple of more. Solar, we're in the solar ETF field. All right, $86 is the share price, the current share price. The holdings, let's check it out. Some of these I don't recognize, but hey, you don't have to know it in order to grow it. Grow your money from it. So we got SunPower, Canadian, Hannon. You get the point. First Solar, you get the point. All right, let's check out the performance. How's it been performing? Past year, 81%. Past 3 years, 263%. Past 5 years, 300+%. And you see, another thing that you can see is who's doing a lot of advertising. You see that a lot of advertisement has been put towards solar. I know I've been getting a lot of advertisement talking about go solar, you can save money. This has a bright future. I know the past 5 years has done 300%, but this has an even brighter future because it only makes sense to let the sun provide all of the energy instead of some of the man-made things that we do. The sun has an unlimited source of energy, so it just makes sense in the sense of the future that it has. Now, yeah, I'll leave it at that. I was going to go on another tangent, but solar is an area to consider. And this stock symbol is TAN. Easy to remember, T-A-N. I had some of this as well, sold some, and I probably buy back in because I had some profits that I gained from it. But think long term. Don't think like I just said from that angle. I was doing some testing of the market so I could be better equipped to let you know how I've seen the most benefits. And I've seen the most benefits from investing in ETFs opposed to some of the risks, the other risks that I was taking. So that being said, TAN, this is the solar ETF. And last but not least, cannabis. A lot of people want to invest in cannabis. And I'm already fast forwarded on the page where it was centered around the performance. So you got a sneak glimpse, but it's still early. The 3 year hasn't calculated, the 5 year hasn't calculated, and it's less than $20 to get a share of this, but you want to aim for having as many shares as possible. That's why I messed up. I usually get a couple shares, but 100 shares is good, you know, or way more. It's people that have thousands, multiple thousands. You just want to have your money in a place, and if you believe in it enough, just let it do what it do. And you look up, and your 1,000 has turned into 2,000, or your 1,000 has turned into 10,000. You know, you just never know. And then if you see it going down, don't fret. That's an opportunity to buy more, especially if it's something you believe has a future. So this one is less than $20 per share, which means that you can get quite a bit. The 1 year return is 32%. Let's see what the holdings are. And then we'll wrap this thing up because I just wanted to show you that more than 10% existed and how you can use the ETF database in order to find certain things that you can go from here and start doing your own homework on. Tilray, that's a big one that people have been talking about as it relates to the cannabis space. But we got a lot of different ones. Innovative, Constellation, Jazz, Canopy. I've heard quite a bit of Canopy because the symbol is weed, and people, you know, really remember that. British, all of that. So it's a ton of different ones, ton of different ETFs. You can go on for days and days, but just think about what you think has a future. If you believe it has a future, then it might be worth you investing in. So just strongly consider investing in ETFs. Don't let anybody tell you that, you know, investing has to be so complex. If you have not already, consider clicking the link below so you can get access to the platform that I like a lot, which is Webull, but it also gives you 2 to 4 stocks that could be valued at hundreds or $1,200 when you make your first $100 investment. So I conclude with that for this particular overview / training. You want to be putting your money to work because a person who is not investing is not even on the road to building wealth. You see, we live in a world where we are conditioned for failure. And oftentimes we have been programmed or fooled into mediocrity. So people find themselves living like peasants instead of the royalty that they were meant to be. What you see here in the royalty movement, We see the king in you. I see that queen in you from start to finish. It's just time to take your seat on the throne, because this is where we uplift your character, your confidence, and your cash flow. As loyalty, you should establish a solid financial foundation that will soon lead to your abundance and thriving empire. Take your seat on the throne. You are royalty. Salute.